Key moving averages unwind as Bitcoin validates historic RS flip. Hey guys, it's Keith Allen. Don't call it a comeback. I never left. I've been heads down on a project. It's been a while. I didn't realize how long it's actually been since I've done one of these. Almost 2 weeks. Thank God I got in under the wire, and we didn't go that long. Hope everybody's year is off to a good start. Certainly the markets are off to a good start, and we're going to cover that today. We are going to start with the charts. Going to start with the candle charts, look at a few things to get some bearing on where we are and where we are headed from here. And of course, talk about this historic RS flip that I believe we may have validated today. Before we dive in, as per usual, if you like the streams, or maybe you're new to the streams, if you like what's going on, do me a favor and smash all the buttons, hit that like, and especially hit the share button so we can spread the love, and hit that subscribe bell up top, actually on that side on YouTube, so you never miss any of my future streams. Live chat is open on YouTube. If you'd like to join me, I always enjoy engaging with you guys. If you've got questions, if you've got insight, let's get it together. Let's talk about it. And without further ado, let's go ahead and climb into the charts. The first thing I want to look at here, something I've been studying a little bit lately, ever since we got into like a lot of speculation about when we'd get maybe a real alt season. Obviously, we had some major moves happening after election day, and that really prompted what was going on here. For the market, we certainly got some really nice pumps out of alts, but the Bitcoin dominance and USDT dominance never really went to where we expect to see them in an alt season situation. So wondering if that may present itself. But let's start here on the USDT dominance chart. And as you can see, we're kind of bottomed out here. We've got 1, 2, 3, multiple bottoms touches here at this level at about 3.78%. And this is important. Like, if you don't understand what this means, basically it means that a lot of the, USDT, obviously the most liquidity providing asset in the game, despite getting a bit of a handicap out of Europe with recent regulations there. This is still the dominant asset for trading in crypto. And when dominance in USDT falls, it means that a lot of the USDT that's available has rotated into other assets, namely Bitcoin and often alts, right? And at the moment, as you can see, the correlation here, let me do something that might illustrate this for you. Let's go ahead and put on overlay Bitcoin, and you can see how Bitcoin price reacts when USDT dominance is at these lows, right? We're making new highs. Here, we made new highs. When USDT dominance spikes, Bitcoin price drops. Okay, another example here where we see USDT dominance falling and Bitcoin price spiking here and here. So I hope that illustrates that pretty well for you. Let's move over to the Bitcoin dominance chart now and see if that gives us any insight as to where we might be in a potential legit alt season. This is where things were getting really interesting, right? November 5th, we had election day. A Bitcoin price started to soar, alts began to soar, and they soared through the month of November and into December. And this is where we thought, okay, we might really be headed for something. Then Bitcoin started to rally, found resistance along this trend line, and that may hold, right? We've had one test there, things pulled back. We got some as this pullback materialized, so did a dip in the Bitcoin chart. So let's go there now, right? So this is where we sit at this point. We got a brand new all-time high here, but the time frame that we've just been looking at, when price was rallying on post-election, we got that rally out of November 5th. Boom, 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 boom. We hit 100K. We moved to a new high here initially around 103K. And then things pulled back a little bit, had another pump, another Trump pump, if you will. We know that this was January 6th, we had the certification of votes. So we were getting this, after peaking here. This is where I had showed you on that Bitcoin dominance chart. Things started to go the other way, and price began to grind lower. And we tested support here above this. This was the range we were trying to RS flip before, right? We had a brief amount of consolidation in this 86 to 91, like 86.6 to 91.6K range. We tested the top of this range multiple times, once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10 times, 11 times, right? And this was the final flush validating that, and really where Bitcoin began to recover from, right? So we got this death cross in there, and now we've unwound the death cross with a golden cross, and price has pumped. New all-time high. This, again, no surprise. We Trump pumps related to kind of milestones in this process. Him winning the election would likely give us a Trump pump. We got one on the day of, or leading up to the certification of votes. And there was a big one right here on Inauguration Day. It played out before the actual inauguration, right? It happened that morning. And so this had nothing to do with any policies that had been enacted. It was merely, how should I say, market volatility, maybe a little bit of killer whale games influencing the price action. I would say exploiting the thin areas of illiquidity in the order book to pump price. And then people thought, oh God, is that it? Are we going to top out there at, shy of 110K? 109, 356 is where we sit roughly, depending on what exchange you're on. And that is a level that hits precisely nobody's target, right? 110, in my opinion, purely a psychological play here. And so I do think we've got more upside, as I've said many times before. I have been focused on an area that is a technical target, a measured move coming off of this classic cup and handle pattern that took years to develop. And so I'm still looking for this 77% move to play out. And that gets us up there in the 120 to 125K range. I don't know that will be cycle top. I don't, with the excitement that's going on in the market right now, I'm not confident that will be the cycle top or not. We'll see how things behave and how economic policy and the economy evolve under the new administration. I mean, there's no question that the market is excited about having a crypto-friendly president. No question about it. And we've already seen some big things happening here. Let me see if I can find this. I shared a couple of things earlier today. One of the most noteworthy ones is that the SEC has a new program, right? Cryptocurrency Task Force. And on this task force, one of the most crypto-friendly SEC officials that we know of, Hester Pierce, is leading this task force. So this is definitely a positive sign, because there's so many that are looking for clarity in the regulatory environment, right? So obviously nobody wants overregulation, including this administration, but there needs to be a better defined regulatory framework. And doing so, in fact, I saw some people talking about this morning from Davos on CNBC. Is the legacy TradFi, if you will, the real big money, the big funds. Yes, we have the BlackRocks and the Grayscales and the Fidelities in already with their ETF, but what a lot of these financial institutions and investors are looking for is real regulatory clarity before they really pour the money on, and before we really see broader adoption from smart money. So that is coming, and that's certainly a positive, I think, for the market as a whole. In terms of what we're seeing, in terms of signs of where we go, like I said, I do like this. I do like this 120, 125K range, right? I think my target is actually right at like 122.5. But let's look at some other things here. We have this lifetime structure, this channel here, if you will. And I apologize if this chart is a little bit noisy. There's a lot going on here. We could take some things out and clean that up for you if it makes you feel better. Um, so I think I have another one right there. Okay. So we have this fib extension here that we're going to talk about, and we're going to talk about this channel here. And so this channel to me is something that's really important. This is a lifetime channel on Bitcoin, and we went for a very long time without ever leaving that channel. And obviously, in the bear market of 2022, we did leave that channel, and we've yet to make it back in. So I view this as the glass ceiling on price discovery at this point. So depending on where things go from here, maybe it's a slower sideways grind up, or maybe it's a rapid rise if we get a catalyst to really push things quickly. Um, the question is whether we're going to reclaim this channel. And price could go on forever and never reclaim that channel, and we could still have seven-figure Bitcoin in the future, right? Way in the future, but nonetheless, in the future, we could see seven-figure Bitcoin. If price can make its way back into this channel sooner rather than later, then this becomes the glass ceiling on price discovery. And that is deep into seven-figure and eight-figure Bitcoin, depending on if and when we get there. Now, we have touched the top of that channel twice in history. Once early back in 2013 top, which was what, like $1,100, and once in 2017 when we snuck up on that 20 grand, and now it's really like, in order for me, the glass ceilings would be the bottom of the channel, the center line, which often acts as resistance, and then ultimately the top of the channel at some point in time in the future. No idea if and when. So let's say we don't make it into that channel, and we do go past this measured move up to that 122, 125K range. I at that point am looking at these fib extensions. And I think that, we already found resistance briefly at this 1.618, right? So we know this works, right? It held here briefly and then took a little while. These are monthly candles. So it took a little while to get up. And then we indeed did work past it. So the next fib extension is at 155. That's a reasonable target for sure. And at that point, we'll evaluate what the market is doing. Is there still enough momentum to carry and continue from there? If so, then I look to whatever comes first, either the lifetime channel or the 3.618, which is around 200 grand, and so on, right? All the way up to the 4.618 at 262. And that has confluence with the channel somewhere in January of 2026. So who knows how things transpire? Obviously, there's concern about how some of the new administration's policies may impact the economy and inflation. And so we've yet to see that come to fruition. That's something to be watching. In terms of trading this now, well, I just trade the technicals and I trade the liquidity, right? And it was easy. I said a few days ago that, and I do have record of that. I haven't been very active on social media or these live streams lately because I've been buried on another project. But I did say that the door was open to retest support down there at 100K again when we saw this bid liquidity leave on, um, I guess this was Monday or Tuesday. The 20. What's today? Today is the 23rd. So this was a couple days ago, and uh, it took a little while to develop, but obviously this morning we did see this support test. Didn't go all the way to 100, and I'm absolutely fine with that. You can see we're now at this point, we can visualize this, right? We had support, we had another test of support, we had another test of support, we had, and then we started stair stepping up. And so, ahead of today's economic data, we saw price come back down lower again after a bit of a round trip yesterday. We saw price come lower again, bid ladders moving into place, and now price going up and eyeing that psychological level of 110,000. Heaps of ask liquidity stacked there, 132 million stacked there. That's this very significant amount for one exchange to have. We don't see this very, very often. So that's heavy resistance. It's not impenetrable. Nothing is impenetrable. Okay, at this point, if the sentiment is there, anything can happen, including a roof pull if price gets up to this level. So be conscious of that. Either way, I view this as psychological resistance, not technical resistance, but the fact that there's this much liquidity puts a lot of strength on that psychological resistance at the moment. So zooming out to see if we can identify any other significant pockets of liquidity that are noteworthy. It doesn't look like there is much, right? This is the lion's share of where things are stacked, right? And there's more liquidity stacked on top of that, in that range, right? This is now from 106, that's 253 million, and another 139 million above that, on that 110, just above that 110 level. So there's a lot to penetrate to move up from here. Do not be surprised if we get any corrections. I saw somebody post today, oh, that's the last big dip before, that's the last big dip we're going to see. Listen, it wasn't that big. It was like 7.5%. And you can never say last because there's always going to be another dip and there's always going to be another correction. It's just a matter of when and how deep it goes. We've talked about this many, many times in the past that, as time goes on and these moving averages get drug higher, the likelihood of going below them is decreasing. But as it stands, we could still see a significant correction. It's very common to have corrections in the 20 to 50% range during bull markets. What that would look like from this all-time high would be 20% would take us down to that 86.5 range, which is the bottom of this prior consolidation level. A 30% move would take us down to 76K. And in that process would fill the CME gap for anybody who is a gap trader. That still exists. And so, you can't guarantee that that's not going to happen. I'm not saying it is, but I'm certainly saying I'm not ruling it out. There's always a chance that we get there. It might take a year, it might take 2 years to go back and fill this, but and all gaps don't need to be filled, but most of them certainly are. So another metric I think you guys might find interesting is here on the material indicators dashboard. This is correlation of alts to BTC, and just as I mentioned that when we see the USDT dominance with this dynamic, notice something, right? It doesn't necessarily mean the top, but it certainly means that we're moving up, right? And so in this instance right here, where you see price spiking, where you see what am I saying? Right here. Okay, we see price starting to move up, right? And again, here, look at how much price appreciation there was. Bitcoin is the pink line here. Look how much price appreciation there was from this point on. So we could indeed have more. USDT dominance could grind down on this level or go lower for longer. And based on what we're seeing here in the global analysis metrics here in the dashboard, this is considered capitulation territory. And if you look in history, we can see that doesn't, these are like levels where price consolidates briefly and then moves on to the next leg. So we've had this consolidation down in this 100K range, and it looks like we're on our way to the next leg up. Obviously, that takes breaking this massive sell wall here up above 110K. And I don't think too many people have issue with grinding in this range. I mean, quite frankly, 90 and above looks good to me. But if we stay above this 100K, if we validate this RS flip here, as it appears that we're doing, if this continues to hold, this is just a whole new level, right? This becomes the next launch pad. And as price moves up, let's say that deeper correction comes from the 120 range or the 150 range. We have to build consolidation levels for price to land on when we get those corrections, right? And so this is now becoming a very nice level of foundational structural support here. So keep that in mind. These pullbacks, these consolidations are all very, very healthy and very, very necessary, in my opinion. So don't get bent out of shape if you're not getting your up only at this point. Mark, hey, hey, Mark, and the comment and the follow is also greatly appreciated. Hope you're getting something out of these. Trying to deliver value. It's all I do. It's all I do here. Anyways, I think that's enough to shed some positive light on this market. My outlook is obviously quite bullish at this stage. Yes, I bought dips and will continue to do so as there's opportunity to do that. And one of the ways that I do that, obviously, you can spot liquidity and find those support levels pretty easily here with a data visualization tool like Fire Charts. But for anybody who's followed the stream for a while, you also know that I love me some mean reversion indicator. And this is the last couple of dips that we got. And that had the bots buying in the 99K range, 99 to 100K range. This one down to 101 and change. Those are all obviously profitable trades at this point, but also good entries if you want to DCA your way into your position. You can do that. Mark is asking, are there sell walls at the 120K level or above? At the moment, I can only see about that high. Fire Charts kind of self-adjusts as we move up in range. So at the moment, I can see that we do have a sell wall at that 120K level. And I would imagine that we would see them at least in every $10,000 increment on the chart. Those are just psychological things, right? There's going to be 125. There's going to be, so we get them at the fives too. But 120, that's a technical range for me. That 120 to 125K is technical based on that measured move on the cup and handle. And I think that you can expect to see some sell walls at 125. Certainly, big fat one I would expect to appear at 150, and so on. So, when price stops in an area that doesn't have any technical merits, or it doesn't have any significant liquidity, I question whether that's the entire move in either direction. So this is why I don't think that 109 is the top. There's just nothing structural for me at that level. Obviously, there's a great deal of liquidity at that level, but I think that's going to change. I think that as we've seen in history, when sentiment is there to move up and move and take out hundreds of millions in liquidity, it happens, right? So be patient. Don't think it's an up only. Don't think we're going to hit it in the next week. As I say that, we probably could, um, but just know that this market is pretty excited right now. So we're going to see, I think, the volatility continue, and that volatility is going to happen in both directions. Okay, you can see that we cleared out some liquidity here on this way up, and so what that does is it creates opportunity to go back down, right back to say this looks like we have a sell wall laddered up from 99K to 102K. Don't freak out. Don't panic if we go back to that 102K level or even down to 99. It's an opportunity. And when you see thin liquidity like this, you should know that that is often going to get exploited by whales. As you can see, whales are buying in this range, and quite frankly, so am I. And with that, I'm going to leave it. I do think that we could see a bit of a retrace of this run coming, but you can see bids are laddered. 16 million here, another 20 million or so there, another 14, another 18, another 14. So don't be concerned if we go back and do this. I'm expecting it at this point. And with that, guys, I'm going to wrap it. Thanks again for the follows and support. I'm going to try and get back to doing these much more frequently. I've been on a huge project that I've been heads down on. I'm not quite done with that, but I am in tune to what's going on in the market. And I'm trading manually, and my bots are doing most of the work for me. I'm not doing a ton of manual trading because I'm really pretty hyper focused on Bitcoin, and my bots are scalping alts for me. Gonna leave it right there, guys. Have a great day, great rest of the week, and we will be talking again very, very soon.